Hello, welcome to European Open briefing for Friday, July the 13th. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. The US dollar remains in a bullish mode. It's set for 2% weekly gains against the Japanese yen, and we're also seeing the dollar index currently trading around 10-day peaks. Stocks are up this morning, though they are mixed in China, mostly up in Asia, and we are seeing a positive start in Europe as well. We also had near to 1% gains on Wall Street overnight as focus turns to the US earnings season, which gets underway later today. We had the NATO summit where we saw NATO members agreeing to increases in defense spending, and this pleased the US President Trump, who, as a result, reinforced his support for NATO. So that led to some easing of geopolitical risks, and we're seeing the yen and the Swiss francs, both safe havens, remain on the back foot, as well as the fact that we haven't had any fresh escalations in trade tensions between the US and China. So that has led to the Swiss franc falling to 2-month lows against the US currency. The euro and the pound, though, do remain pressured by the bullish dollar. We can see both currencies down this morning. The Australian dollar is also somewhat weaker. Yesterday, you did see a strong rebound. We had fairly strong export numbers out of China. So we've yet to see any impact on Chinese exports from the trade tensions, but that provided little support to the Aussie. If you look at commodities, we're seeing oil prices lower, extending their recent losses. The International Energy Agency did warn of a limited spare capacity, that the risks to that on the oil market, but overall, we're seeing the impact still from Libya, where several ports have reopened, leading to a large supply entering back into the market. So that's weighing on oil prices, and gold prices are also subdued this morning. So looking at the major performers, you can see there, top of the table is the dollar index, and at the bottom we've got Kiwi dollar reversing some of its recent days gains, and also pound dollar is also substantially lower this morning. Taking a closer look at the dollar yen pair now, we can see yesterday we did actually see the dollar briefly falling after inflation data, where the month-on-month rate was slightly below expectations, but the annual rate did edge up to 2.9%. That's a more than 6-year high. We also had an interview with Fed Chairman Jerome Powell, who said who was fairly optimistic about the US economy, saying that the economy is in a really good place. Sort of that later led to a resumption of the dollar rally, hitting a fresh 6-month high of 112.76 on the expectations that the Fed will raise rates a total of 4 times this year. Taking a look at now at dollar Swiss franc, we can see the pair has broken above parity, 2 months hitting a 2-month high of 1.004. So safe havens such as the yen and Swiss franc have been on the retreat for much of July, despite the escalating trade tensions. The fact that China didn't respond to the latest US tariffs of $200 billion on Chinese imports did help calm the markets after that announcement. Also, the developments in NATO also helped ease some geopolitical risks. All of that has led to lower demand for safe havens such as the Swiss franc and the yen. And now turning our attention to the pound, because President Trump is visiting the UK, and he's already caused controversy by criticizing Theresa May's Brexit plans, saying that a soft Brexit will probably kill a future trade deal with the US. It also raises the risks that his comments would rally pro-Brexit MPs behind say the likes of Boris Johnson and David Davis, who resigned in opposition to May's plans, and could lead to rejection of May's proposal once the white paper heads to Parliament. Overall, though, it's the white paper is fairly positive for sterling because it proposes a soft Brexit with a free trade area on goods. Although there are some question marks about it, as services have been excluded from that agreement. Services, of course, makes up a bigger portion of the UK economy, so still a lot of question marks about that. So we saw sterling briefly rising after the publication of the white paper, rising to around 1.3240 before retreating lower. It's currently trading at around 1.3130 with still a lot of uncertainty about Theresa May's future. Looking at the rest of the day, it's going to be fairly quiet with not much major data. That's it for me. Thank you very much for watching and have a great day.